What's going on, everyone? Welcome back. So in today's video, guys, I want to talk about how I traded Costco yesterday on their earnings miss, okay? So if this is your first time tuning into the channel, go ahead and subscribe now so you don't miss any content and hit the bell for all notifications. So Thursday before close, guys, Costco reported earnings and they missed by 1 cent, but they beat on revenue by $360 million. So initially, when I seen this earnings report come out, I thought it was a really good earnings report. You know, missed by 1 cent and $360 million beat. And I noticed that the shares started to fall a little bit in after hours, but nothing major. It was only down about 1% or 2%. But Friday, right before the market opened, Costco actually dropped 4%. So I seen the 4% drop, guys, and I immediately thought that the market was just overreacting to a pretty good earnings report. But analysts come out and said that the focus is on growing margin pressures at Costco. And even the CFO of Costco come out and said we've seen a little bit more margin pressure as there's been a little bit more retail competitive pressure out there, not only from supermarkets, but Sam as well. And apparently investors and analysts thought the worst and sold everything. So it's after this report come out that I started noticing Costco was dropping dramatically, and also the index is trading down so violently. I knew that Costco was going to start taking out some of its lows. Let's go over to the chart and I'll explain further. So right here, guys, on Thursday, this is roughly when the earnings report come out for Costco. It was around 3 o'clock in the afternoon, and they had their earnings miss. Like I said, they only missed by a penny. The stock really did not get hit that much initially, so it just traded into after hours, and I started watching it trade until the market closed, okay? But then, in pre-market on Friday, I noticed that it was actually trying to tick itself back up. It was trying to move itself back up, but still trending down from the previous day. Then right here, guys, when the market opened up, it was just a few minutes before the market opened up. That's when that report about the margin anxiety came out and how analysts think that the incoming competition from other retailers is squeezing Costco and not allowing them to kick out the kind of profits that we're used to seeing. So that's when I started noticing the stock dropping pretty hard, and I started paying attention to the chart patterns. So the stock was already down a couple dollars, guys, from the earnings report, and then it dipped down even harder. And I noticed too, one of the big reasons why I decided to make a trade on Costco is because all the indexes were pushing everything down collectively. So then I started noticing the stock was dipping down pretty violently, taking out the day's lows, and with a slight tick up, and then again it would just keep on ticking down, and it was not finding any level of support. Now this goes back to my rules, guys. I want to talk and really emphasize my rules. Two things before I made this trade. Number one, I had an entrance strategy and I had an exit strategy, okay? And the second rule I want to emphasize, guys, is I used limit orders, okay? I set a price. I wanted to short Costco at $211.50. That does not mean I was going to get that. The important thing I want you to keep in mind here, if this order would not have filled, I am not going to chase this stock all day, okay? I'm not going to get in there and modify my order and put it down to 210.50 and then 209.50. I'm not going to chase it down, okay? I set my limit order to short 50 shares of Costco at 211.50, and I did manage to connect on this trade. Before you ever make a trade, go into your trade, like I said, with an entrance strategy and an exit strategy. So right here, guys, in this dip, it got down a little under $210. That's when I put my limit order in. I wanted to short 50 shares at 211.50, and I connected right here on this small spike back up. All I was aiming to make on this trade, guys, was $200, okay? So I set my buy order for 50 shares at 207.50. That gives me $4 per share on 50 shares. That's 200 bucks. That's all I was looking to make on this trade, okay? And so as you can see, as the trading day went on, it actually hit much lower. You know, even in this dip right here, it got under 207 and traded into the 206s. You know, even as the trading day went on, it got much lower. It got down low as 205. And right here before the day ended, guys, it even got almost down to 205 even, and then it traded back up just a little bit before it went into after hours. But Again, I just want to emphasize my rules. The reason I set limit orders is, like I said, don't get greedy. Okay, you're not going to know exactly when this stock is going to reverse. And also, the S&P 500, the Russell 2000, and the Dow Jones were all getting near support levels. So that's something I've seen many times. That's why I always stick to my game plan. A lot of times, guys, the indexes will hit a level of support and the markets will reverse. They'll start going back up. And, like a lot of these days, guys, we start off really, really red. By the end of the day, we're far into the green, and then vice versa. Right now, while we're in this really volatile market, all you can really do, back off of your aggression a little bit and try to trade a little bit on the safer side. Set your goals a little lower. And like I said, take profits. Do not be scared to take profits. If you're going to be day trading, if you're going to be making trades during the day, like I said, the most important thing, have a game plan going in, have a game plan going out, and lock in those profits. So anyways, that's all I got for today, guys. Thanks for watching.